Did you know you can secure your retirement account with physical gold and silver? My friends at SD Bullion can help you protect your retirement today. Just visit sdbullion.com/IRA. Hello, Turdville. It is Thursday, March the 5th. It's time for your daily podcast. It's, a little bit before 5 Eastern. I'm only recording this podcast now because I could certainly sit here for another couple hours and keep watching things and scrolling and learning more and becoming more dismayed. But I might as well just get it on and get this done. There's one hint of a little bit of a bump this afternoon. We'll talk about that here in a second. But if you feel like I do, it wouldn't surprise me. All of this, Trump said it would be a good couple of weeks. And as this drags on now into day 5 or 6, it certainly feels that that's the case. Doesn't seem like it's going well. Doesn't feel like it's going well. But then again, of course, we're used to things moving quickly. And when you bumble into something where you're taking on a full-on nation as vast and diverse and, everything else as Iran, well, it's going to take a while. The current assessment in the markets, I think, is all wrong. I think we've gotten so reactionary and so not from a ultra conservative sense, just reacting. Oh, ho, hey, ho, squirrel. Everybody's scrolling. The algos clearly with their headline scanning, scrolling. There's no real thinking going on. What's happening in the markets is crude's going up. Every dollar in crude, they say, is like 2 cents at the pump here in the U.S. Okay? But crude's going up. And it's not just crude that's impacted, right? Liquid natural gas, fertilizer, there are long-ranging implications here. But crude's going up. And so the knee-jerk reaction is that's going to be inflationary. And since that's inflationary, we got to sell off the bonds. And with the rising rates, we got to buy the dollar. And with all of that means the Fed's not going to hike. So we got to blow out our gold and silver. And while gold and silver are going down during New York Stock Exchange hours, the shares get the crap kicked out of them. Nobody thinks. It's all just this reaction. And it's all bogus. I started exploring this today. I recorded a podcast with Dr. John, who used to be Silver Doctors with Tyler, and now he's started his own podcast and stuff. And I'm exploring this with him today because I've been thinking about this for a couple of days now. And I actually have some stuff on the screen of other people starting to think this way. You go back to 1973. There are not a lot of people around from 1973. I was 7. Okay? All these hotshot traders were not even born, right, until 1993 maybe. So back in 1973, the Arab oil embargo and oil shock, that is maybe more analogous to what you're seeing here if this drags on. And even if it doesn't drag on, the damage that's being done to the oil infrastructure, like that Bahrainian oil terminal today, is going to have a long-term impact, okay? So anyway, the situation more analogous to 1973, what came after that, okay? And what did come after that? Stagflation, okay? Not just based off of what happened in oil. The stag part is what I'm getting at, okay? More so than the inflation part. We already know what Trump's going to do. I wrote about it this year. In January. I've been talking about it for months. The run it hot. We got to grow our way out of the debt. So this notion that somehow this war is going to make the Fed hike rates and Trump allow that to happen is just folly. It's nonsense. Again, the only way you can get out of even manage this is inflation and negative real rates. Pay off yesterday's debt with the cheaper dollars of tomorrow. It's the only way it could ever possibly work. It's the way it always has worked. And they just got to ramp that up even more. Do you think they're now going to hike? Stave off liquidity, crash the stock market? Come on. So, like we talked about yesterday, you get in times like this, you got to keep your wits about you. It doesn't mean you just whistle past the graveyard. My narrative is correct, but you got to have some principles. You got to have some guiding core values, core forecast. And that's where I think this is just all dead wrong. Now, this afternoon, there was some news. There was back on Monday. Rubio said, yeah, tomorrow we're going to announce some measures, try to get oil price under control. And I thought that meant, Strategic Petroleum Reserve drawdowns or something like that. Well, apparently that's coming tomorrow. And when that hit the tape shortly after 3 o'clock Eastern today, crude oil began to fall. It hit as high as 82.14. I got a last of 78.79. The dollar, which had been up almost a point, now only up 35 cents. And the metals have come off their lows. Gold was all the way down to 50.60, which was down $75. It's now 50.95, down 40. Silver hit 80.66. It's back up to 82.66 and only down 50 cents. Of course, the damage was done to the shares. We've talked about this for years, especially in light volume when nobody cares. All those years from 2013 to 2023, if you can control silver, you can control the shares. Remember the 99% correlation between the two? Well, did I show you the action so far this week? It's the same as it's ever been. And so because the metals, particularly silver, have been getting pounded every single day on the COMEX, I'll show you that. The shares have been getting, GDX is down more than 10% on the week. Makes no sense. Oh, it's scary. Okay, maybe gold's going to 3,000. And so it should be down 10% because it's forward looking. Remember, we talked about this yesterday. Or it's just a complete overreaction by non-thinking algos and people following this narrative. Oh, it's inflation. Now you could say, okay, margins are going to be hit for the mining shares because energy prices are going up. Okay. When's that going to really have an impact? Not this week. Not this quarter. Anyway, so we'll try to stay focused because I think I'm right. And I'm going to feel that way until I begin to suspect that I'm not right, and we haven't gotten there yet. Open interest continues to fall. Another 500 yesterday in silver, down to 112,794. As I told you yesterday, those are the lowest levels since 2013, 12 and a half years ago. There's no liquidity. So that's how we went up $4 and $5 a day at the end of last week. That's how we've gone down $4 and $5 a day this week. We're just as liable to turn right around and go right back up. Maybe the BLSBS will do that tomorrow. Maybe it disappoints. Maybe we get a whole bunch of negative revisions and all of a sudden the narrative, changes. Wait, it's the stag part we got to worry about. Could change that fast. So anyway, that's where we are. I really thought I'm taking a beating I got stuck in some really short-term calls that I bought last Friday because I thought things were really looking good. I suspected this war was coming, but I didn't know it was going to start on Friday. So I'm taking a beating on some short-term stuff. So that's the way that goes. But I haven't changed anything. Haven't sold anything. I did sell 10 of my UCO calls the other day at 77. Still have the other 10. Still have my gold calls that are going to have 2 weeks left to go. And we'll see what happens tomorrow. And we'll see what happens next week. I had a great discussion with Christopher Mullen back on Monday. And that's the first thing you have on this page. Chris made some excellent points. He's very bullish still on gold. Thinks, and his Fibonacci numbers line up with my numbers of another 20% on the next breakout. If you go back and read the macrocast, I said that would be summer, late spring, summer before that one happened, following a pattern of breakouts and consolidations. We're clearly still in a consolidation. He also talked about how price typically bangs around within the big red candle. And while you're still within the big red candle, you're subject to all kinds of other big candles within that candle. We talked about that on Monday. We got a big red candle on Tuesday, didn't we? So anyway, it was a good discussion with Chris. So that's the first thing on this page. Images on this page. This is what I'm talking about right out of the chute. Chris Martenson picking up on this. I don't know who Rex's rule of USN is, or shiny stocks, but they're right. Crisis already much worse than 73, because as bad as that was, that could have ended any time. This is stuff, all this stuff's being offline, right? That's what this Rex's rule is. Remember the oil embargo of 73? These are all things that I've just found this afternoon after I already recorded with John and have been talking about this. And this shiny stocks is right, at least in my view. Took 6 weeks for the oil shock for the markets finally figured it out. Huh. May take 6 weeks here too. Whatever, I got time. But this is the right view, at least in my mind. All right, here you go. Treasury to announce measures as soon as Thursday to combat rising energy prices that include using oil futures. You don't say. As if we haven't long suspected the FRBNY trading desk operating on NYMEX to keep oil prices steady and calm, keep inflation under control. Well, they've already got the facility to do it, obviously, if I'm right. So now we're going to overtly manipulate the NYMEX, apparently. Okay, well, that'll be fun. See how that goes tomorrow. And when that news hit, that's when crude backed off. Now, like I said, over $3. The dollar has fallen back and everything else has gone back up, because that's what the narrative is for now. So maybe we'll get a break. Okay, what else is on this page? Again, your charts of when that happened, I guess, are next. Again, the dollar was all the way up here, 99 and change. And then at 207 Central or something like that, down it went. You can see about the same time. Again, this is just algos, man. It's not like there's any thought that goes into this. But it just is what it is. Okay, next. Here's a chart, I guess, from the Kobeisi guy. All right, he's trying to project out what inflation will be based on levels of crude. I don't know how you do that. You know, obviously energy a big input to just about everything, whether it's actual core materials or just energy. Crude 150, CPI is 4.3%. Okay. I don't know, but this is the kind of thing. This is the mindset. Nobody looking past tomorrow. And maybe we shouldn't, the way this war is going. Here's from Doug Casey. Or actually, look at this Nuttall guy first. Largest loss of oil supply in history, 3 times bigger than the Arab oil embargo. And yet, crude was, like I said, still only got to 82 today. Everything, it's just going to be fine. It's going to come right back on. You know, the U.S. always wins these wars really fast. Again, even Trump, when it started, said this was going to be a period of weeks into maybe a couple of months. It ain't going to be fast. And have more oil productions coming offline by the day. Strait of Hormuz shut down could remove 20 million barrels a day from the global market that produces 100 million barrels a day. So again, this is a big shock. But the concern should not be the inflation part. The concern should be the economic damage part. And the Fed is not going to be hiking. They're going to be cutting. And everybody just poo-poos that. And I don't understand it. But like that shiny stocks guy said, just give it some time. They'll figure it out. This was the big news today. The Bahrain Petroleum Company, BAPCO, 400,000 barrels a day. Offline. How many more Babcos are out there, right? And the cost of shipping. U.S., did you know this? Biggest oil producer in the world. Even bigger than Saudi Arabia. Did you know that? It's true. So now, we're going to start shipping crude from the U.S. Yeah, good luck. That's going to cost you a little bit of money too. Oof. Just a couple more. Yeah, you think the Russians may not be overtly helping the Iranians, but do you think maybe they are covertly trying to weaken the U.S. as much as possible You think? Again, I hope and pray. We all should. I don't care what you think of Trump. It doesn't matter. It doesn't matter what you think. It doesn't. What matters is we need this to end. We need peace. We don't need death, destruction, keep pushing closer and closer to World War III, the unknown unknowns. So hopefully it'll calm down. Finally, this from yesterday. Again, U.S. military via Trump wants U.S. entering a wartime resource mobilization phase. Okay? Requesting proposals by Friday or something like that. As if, just a flip, we need more of all these minerals, including silver and copper, so go get some. Doesn't really work that way. But again, sell all your silver, your silver futures. This is such nonsense. Okay, and finally to your charts. Here's gold on the week so far. In the box is COMEX hours, and you can see each of the 4 days. Granted, it's pretty ugly Tuesday night. Okay? But the other 3 nights have been fine. Through Shanghai and through London. It's the COMEX part of it that has been gnarly. Hell, we'd be even on the week if it wasn't for the COMEX smashes. And what are we right now? Down maybe $140 on the week? Something like that. It's not inconceivable that you could get that back. But we'll see. All right, let's see. Dollar index. Are we just going to keep banging out the red greens now? We're going to have another red tomorrow that takes us back down? Maybe. BLSBS will have something to do with that. What crude does, obviously, with these measures on the NYMEX, going to have something to do with it too. But for now, again, it's broken out, but it's still kind of riding the line. It hasn't extended away yet, which is helpful. And as we've been saying all week, here's your gold chart. 20-day and the 50-day moving average. Still riding that 50 or 20-day, the red line. 50.90 is where that is. I have a last 50.95. Okay? So, unless we start breaking down, significantly below, and actually taking out the 50-day on a closing basis, the trend, just riding along this 20-day moving average, which is kind of self-reinforcing, is in place. How is this different from where we were in the middle of November or at the end of December? It's not. Let's see what tomorrow brings. Silver. What does silver need to do tomorrow? It needs to get back above 85. Remember last Thursday we talked about, gosh, we get above 90. Could we even close at the high of the month? And we did. That's why I was so optimistic about this week and then this friggin' war. Whatever. It's been a long week. But if we can get this thing back above the 50-day tomorrow, 84.92, let's call it 85. Again, is that asking too much? It's $2.50 from here. No, it's not. Falling dollar, easing crude. Yeah, we can get back up to 85, 86, 87. We're still down substantially on the week. But if we could finish the week back above the 20-day, back above the 50-day, that'd be helpful. Finally, the shares. What else? Okay. It's been a terrible week. And I'll show you why. Again, we'll wrap up with one last chart here in a second. But the shares dumping on during COMEX hours, which coincide with New York Stock Exchange hours, the machines just dump and dump. They don't give a shit what the fundamentals are. They don't care about free cash flow. They don't care what the earnings were. If gold was being sold at $4,200 in the fourth quarter and now it's being sold at $5,000 in the first quarter. Don't matter. They're not looking ahead. It's not a forward-looking market. The market looks over the right. And bullshit it does. That's antiquated. Maybe back in the day, 30 years ago, when there are actual people doing this, all that you see in these red candles is that the fact that the metals were falling while the New York Stock Exchange was open. So now where are we? Right back to the trend line. That double bottom from late October, early November at 68, which is the old all-time high. New trend started right after that back test. And as you can see, There have been multiple tests of this trend line. Now, you break this trend line, start closing back down near 90, we got problems. For now, if we have a good day tomorrow, we'll come right back up. It's just annoying as hell. And finally, this is the one I was telling you about. This is just the last 5 days. You probably figured out what you're looking at here. To make it so that the trading hours overlap, it's the SLV in candlesticks and the GDX as a blue line. What do you see intraday? Now, today was ugly. Shares really got dumped, which is all part of why we're so frustrated. But even with that, you can see the blue line, even though it gapped way down today versus where SLV is, you can see it tracing out the same pattern. So anyway, we've bitched about this for years. How if you can control silver, you can control the shares. And if you control the shares, you can control sentiment. Remember all this? And when nobody was playing in these things all the way through 2024 and into 2025 or whatever, this pattern held. Well, you know what? Started to break free a little bit last year. But now we're back into, just for the time being, do I have to even explain this further? You see this for yourself. So good luck. Again, BLSBS, 8:30 Eastern tomorrow. I'll be up early to see what it is. We'll have a post in the morning, podcast in the afternoon with weekly charts. And it should be a really interesting caught the way they wash this out Monday and Tuesday, boy. And with open interest at these levels, I'll really be curious to see, particularly in silver, where the managed money position is, all that stuff. So anyway, we'll talk about that tomorrow too as we wrap up the week. Hang in there. We'll see you tomorrow. Pal Turd Ferguson signing off, and I'm out.